Welcome back once again. This is Wing Yi, and today I'm going to share with you a weekly listing of investment properties. So without further ado, let's get it started. All right, today's current batch. Cash flow is king. Cash is not king. Cash flow is king. Meanwhile, as you building your real estate portfolio as an investor, as a mom and pop investor, most of you are in this category. So build up some cash reserve for emergencies and unforeseen expenses, and don't over leverage. Understand your numbers, get proper financing, which I will talk about it later on this presentation. We have some extremely very favorable financing from a lender that we are using exclusively, which most investment lenders are not even willing to enter this so-called space because it's a low price property. Most lenders in the country does not even want to waste their time to do financing for our investors. But this particular lender does it because we provide volume. So we send this loan agent a lot of business. So it's a economy of scale for this individual. So he's willing to finance these low price properties. So therefore, our investors can benefit because this kind of financing, it could disappear in the future. We do not know. So, and finally, invest in the right market. That is so critical, and I will talk more about that. So before I will give you the batch of inventory for this week, let me give you some highlights of the unique aspect of you folks out there potentially creating a multiple property purchase investment portfolio over time, right? I mean, it takes time to build up this portfolio, but hey, you start with one rental at a time. So maybe more than one rental at a time for some of you. So the highlights are scale your portfolio over time so you could potentially achieve retirement 10 years from now. It'd be ideal if you have 10 rental properties or more. I used to have this concept like 10, 10, 10, 1, buy 10 properties, retire in 10 years with $10,000 of monthly net passive income, and have $1 million of net worth. This formula is somewhat outdated because I created this formula like 20 years ago. So I have to update it accordingly. So anyway, okay, another highlight of this particular presentation is that these rentals are appraised properly. It is off market. It is not in the multiple listing service. They are not for the general public. They are provided for only select real estate investors, regardless of where you live. By virtue of watching my video, you could be physically living anywhere in the US and you have the potential to have access to this type of inventory listings. Next, these properties are turnkey. They are all rehab. Yes, they are older properties. Look, older properties it still works. It has worked for many, many years. It will continue to work as long as they are rehab properly, they're fixed up, maintained, the whole 9 yards. They will pass third-party inspection with flying colors. And very, very importantly, the next thing is professional property management in place. They will do everything for you. You can be a remote, faraway investor, and this process, this concept, this philosophy still works. They handle everything on your behalf. Work smart, not work hard. Again, regardless of the purchase price of these properties, and you'll be quite surprised by the price point. And like I said, our lender can finance these properties. If it's a single family home residential investing property, minimum is 20% down. If it is a duplex to fourplex, 2 to 4 units, is typically minimum requirement down payment is 25% down payment. And furthermore, you have the ability at your discretion to buy the points buy down, so you can get a better interest rate as an investor, so you can cash flow even more. And these kind of properties are normally pre-leased, have a renter in place. Even in certain situations, they are not pre-leased. They're very, very easy to rent. Again, you can live anywhere in the US or even out of the country, for that matter. You invest out of state remotely, passively, and successfully. You are the direct investor. You're buying under your name or in the name of IRA, depending on your situation. And of course, you're working with a very reputable turnkey provider who provide this private portfolio of investment properties on a weekly basis for investors out there, such as the one you guys are listening. So these are type of properties. Don't let the outer physical nature of this property scare you in any way. But these properties will last a long time because even though they are built 80 to 100 years ago, but when this turnkey provider, when they rehab your property, they make it turnkey, they make you rent ready, and they go through a very stringent requirements and due diligence to fix up the property for you, so you can get this property rented. So as you can see, this is the typical interior of all these type of properties. It does not matter single family home, duplex, triplex, or fourplex, or sixplex that are within the portfolio that you could purchase. Okay, so the interior, this is the living room, bathroom, all upgraded, all rehabbed, all done with very, very professionally. They have a very reputable crew and contractors and fixers and rehab team that does an outstanding job for this type of rental properties for out-of-state investors. Okay, this is one of the bedrooms, and this is the other area of the living room. So, right, so, and most important thing is all about the numbers. And people, investors, for decades have invested in this type of property, and they have done it very successfully. We have helped hundreds of out-of-state investors for many, many years to create and scale these type of portfolio, and they have done very well long term. This is buy and hold investment. Okay, I just want to make this critical point. So I think we have 4 properties for you to evaluate. By the way, this kind of properties usually takes about 1 week before they get under contract by some investors. I mean, we have investors from all over the world, from the Middle East, from Europe, from Australia, from UK, from Canada, and of course from throughout the US that converge into this market. It's a Midwest market. Okay, there's 2 ways to buy investment property. You buy in the hybrid market, or in the South and Southeast. Those are newer homes that cost a lot more, so require a lot more down payment. Or you buy older homes in a blue collar type of Midwest markets. You know what I mean by Midwest, right? In this case, these property listings are located in Buffalo, Niagara Falls, New York. But nevertheless, let's go over the numbers, which is very, very critical, as you will see momentarily. Okay, so the first properties that are available, I don't know, some of these properties could be gone today, could be gone next week. We do not know, but hopefully within every week or so, I will come back with this type of video presentation. We will have some other listings available, but suffice to say, they are very, very desirable because the reputation and credibility of this turnkey provider in helping out-of-state investors and out-of-the-country investors to buy these. A lot of the investors in the Midwest market, in this kind of very, very good stable market, they buy all cash or with the self-directed IRAs. But ideally, you need to do leverage. So financing is the best course of action for most of you mom and pop investors out there. One more thing, some of you are thinking, or you lack, experience or education. I could say this one thing, and having been doing this for decades myself personally, and I have guided and worked with many out-of-state investors for a long, long time. And some of you guys, you don't really need that much experience. You could be a newbie and are able to create this type of investment portfolio. Yes, that's very, very much doable. So I just want to get this out of the way. All right, so the first property in question is this property. It's a single family home. It's listed at $68,500. So you put 25% down payment at an interest rate of 6.3%. I'm assuming you can use points buy down. You buy down the points so you can get a better interest rate, or you can do a 5-1 ARM, 5-year interest only. Then after the 5th year, you can go through go back to a 30-year fixed rate mortgage, or straight out 30 year. If it's a 30-year fixed rate, straight out, you have to deal with the current interest rate environment. Could be anywhere from 6.5% to 7% for real estate investors, which is typically higher than a non-owner occupied type of loans, just so you know. So with a 25% down payment, your total out of pocket is only like $17,125. If you include closing costs, total out of pocket is around a little bit more than $23,000. Isn't amazing? You can leverage through, you can risk only 23 grand to purchase a $68,000, $500 income producing asset class, which is absolutely mind boggling. And the rent, you can get a projected rent is $975 monthly. We minus the vacancy factor. I put in all the numbers are very realistic, okay? Nothing, there's no fluff. This is a very realistic numbers. We call it pro forma. Vacancy rate of 2%, appreciation rate of 3%, and maintenance, we allocated 5% maintenance of the rent to address any unforeseen maintenance issues which will pop up, especially with this type of properties. So $935 gross rent relative to the purchase price, it give you a rent to value of 1.4% rent to value, which is a very, very attractive rent to value ratio. Typically, cash flow property at 25% down payment, rent to value ratio is really the minimal. Ideally, 0.07%, but you're getting 1.4%, which is amazing. Capitalization rate, 9.9%. I'm not going to go over the calculation. It'll take too long for this purpose of this video. Suffice to say, all these numbers are very, very attractive. At the end of the day, you have property taxes monthly, debt obligation, 10% property management fee, and low insurance monthly, as you can see here, and maintenance costs as well. At the end of the day, on a monthly expenses, the monthly cash flow, the monthly net cash flow is $248. So these numbers are extremely, extremely, very, very desirable. So this is okay. All these numbers, all these financial indicators are above the minimum investor metric, numerical metrics. So trust me on that, okay? I don't want to spend additional 1 hour to talk about how do you calculate for rent to value ratio, capitalization rate, cash on cash return, which is double digit 13%. Total return on investment is all about, this is just a first year projection. Okay, and the second, third, and fourth year, again, I don't want to spend too much time. Third, fourth, and fifth year, your IRR, your internal rate of return is exponentially. Okay, it's 10x if you crunch the numbers over time. All right, so this just the first property, good cash flow, good appreciation, good ROIs, everything. The second property that are available to talk about is another single family home, same area, Niagara Falls, $84,000, all rehab and everything else. Like I said, 25% down payment at 6.3%. You do a points buy down to get a better interest rate, 30-year fix. And then you put 25% down payment. So your down payment plus closing cost is only $26,000. Amazing, amazing. And the rent is very, very high, $1,200 rent, monthly gross rent relative to the purchase price. That will give you a rent to value ratio of 1.4% and a capitalization rate of 12.3%, mind-boggling. Cash and cash return 22%. Where else in the country can you get something like this? Not the western region of the US, not the northeast. We're not talking about those cyclical market where the home prices are very, very high. We're talking cookie cutter, entry level, low entry point purchase price, and you match a good rent situation, and that's how you crunch the numbers. This is the ideal type of investment property you can scale multiple times over the years, over time, right? $1,200 monthly rent minus 3% vacancy rate, minus your monthly debt obligations. As you can see, taxes, insurance, property management fee, and your mortgage payment. Your monthly mortgage, you're paying $390 plus all your debt obligations. At the end of the day, look at this. Mind-boggling monthly net cash flow of approximately $472. This is truly an amazing cash flow properties, but it's much more than cash flow. I will talk about the multi-dimension aspects of this type of asset class later on this video. Suffice to say, all the numbers are way exceed the minimum threshold for investment analysis. All right, so very good, excellent cash flow, almost $500 monthly net cash flow of all the deductions, the vacancy factor, maintenance factor, all the monthly debts. We're talking like great passive income. All right, so this is the second property, and the third property, we're going to segue to fourplex. Isn't amazing? This is a quad. All right, and look at the price, $249,000 fourplex. Where else in the country can you find something like this? You put 25% down payment based on similar interest rate. So your total out of pocket is a little bit less than $70,000. You get these 4 doors rented. Projected rent is $3,500. So 4 times 35, like what? How much is it? Almost $900 monthly gross rent per door per unit of this fourplex, minus vacancy factors, debt obligation, taxes, insurance, the whole 9 yards, and your mortgage payment you have to pay, which is in this case $1,186. At the end of the day, your monthly net cash flow is $756, which is extremely high, 1.4% loan to value ratio, 9.2% capitalization rate, double-digit cash and cash return, and this is just a first-year projection. First-year projection, you add the annual net cash flow plus the principal reduction value add plus your first-year appreciation of $7,400 at 3% projected appreciation rate equals, total of 18,718, right? This is your, at the end of the first year, imagine if you hold this property long-term, you're going to have multiple streams of income, triple-digit return. So only the first year, 18,718, your cash flow appreciation plus principal reduction benefit plus tax benefit divided by your total down payment, 68,280, equals your total ROI of 27% in the first year of ROI. This is mind-boggling. Great numbers, everything. Okay, this is a fourplex at $249. Amazing, amazing. Very rare. Anywhere in the country, you get something like this with these numbers, this high value, long-term stabilized investment. And I think this is the last property we're going to promote. Now we're into a, whenever you have a higher than a fourplex, we're into the commercial type of financing. So it's okay. You can still get some commercial loan for this. So a little bit higher rate. Still amazing to have a sixplex, all rehab, all turnkey with renter in place for a mere $364,000. And if it's not value add, I don't know what is. So you put 25% down payment, so your total out of pocket is total down payment is 88 grand plus closing costs of 6,000 or what have you equals $95,000 total out of pocket, a little bit under 100 grand to buy a sixplex. This is talking about a cash cow. So your gross rent on all 6 unit total like $4,048 minus the typical debt service that we just mentioned. I'm not going to go over it. You can see it right here for yourself. And then with a interest rate, with a commercial loan, is not a Fannie Mae loan. Of course, we have access to commercial lenders, because you're working with a team. At the end of the day, so your monthly gross rent of $4,040 minus your monthly debt obligation, including your mortgage and other related expenses, which I went over several times already, equal monthly net cash flow is almost $700. And as you can see, the rent to value ratio is 1.1, capitalization rate almost 8%. All the numbers looks good, 23% total ROI at the end of the first year. So this is amazing, very rare. We don't have that many of these sixplexes available from time to time, maybe once every 2 months this is available. So this is a very desirable. It'll get under contract very, very quickly by somebody. Okay, so this 4 property portfolio is for this week's listings. Now let me take a step back and share with you why income property is rental property is the history most powerful and proven multi-dimensional real estate asset class. It is the world's greatest wealth building investment vehicle. Why? Because there are more than one way to make money. You need to understand that. Whether you're a newbie or experienced investor, it behooves you to understand this concept. Otherwise, you could be missing out. So there are 5 ways to make money when you purchase an income property. One is cash flow, which we discussed clearly. Your positive cash flow. Cash flow is king. Cash is not king, especially cash that you leave in the bank account earning you 0% interest, which is eat away by inflation if you do that. So make your cash finance the property. So cash flow is one way to make money through a rental property. The second way is tax benefit. Of course, I'm not a tax advisor, so consult with your tax advisor, but a multiple way so you can learn about depreciation, passive losses, cost segregation, real estate pro tax status, cash out refinance tax free. You could do a 1031 tax deferred exchange. And then the third way you can benefit from rental property is appreciation potential. That's how you become wealthy. Consistent long-term growth over time. And finally, leverage. No other investment asset class out that will afford you the ability to leverage. You're only putting 20 to 25% down payment to buy 100% of an asset, but your return you get from income property is based on the actual purchase price, not the amount of your leverage, not the amount of your down payment. Furthermore, you're getting an amazing 30-year fixed rate mortgage, which is a hedge against inflation, is a hedge against recession, is a hedge against almost everything else. So, and of course, I'm not going to go over the investment philosophy too much, but income property, rental property, you invest, you buying something that people need shelter, people need a place to live. So buying an investment property is you invest in the necessities of the world, right? And of course, have your long-term goal in place. You invest for the long term, buy in a good market, stable market. Don't gamble, don't speculate, don't buy overpriced property in California, although I live in California and Bay Area for the past 30-something years. Don't buy in overly expensive market because they're not going to cash flow. Don't buy in the western region of the U.S., the entire western region. We're talking Arizona, Las Vegas, Nevada, Pacific Northwest, not California, not Idaho, not you, because those places are way too expensive. You're not going to cash flow because the rent you can collect are not going to cover your debt obligations on a 25% down payment. Similarly, with the Northeast, right? Don't buy any overpriced investment properties in Northeast, like New York City or New Jersey or Connecticut or Massachusetts or anywhere of those areas, because once again, the returns, the yield, and the rent to value ratio is just not going to cover. Do you clearly understand what I'm trying to say? Anyway, so therefore you buy in a stable tertiary markets in the Midwest, the way you can get these numbers. You invest for the long term. Don't gamble with your money in other high risk markets, and do not speculate. And also, when you buy this kind of 1 to 4 unit properties, you buy direct. You're in control. I mean, you're not at the mercy of a of a mutual fund manager or a syndicator or one of those package investment where you have no control. I mean, you at the risk of those individuals that could be very unscrupulous, what have you. Because when you buy this 1 to 4 unit, you buy under your name, under the name of your self-directed IRA. You are in 100% control. Okay, and yet you have a great team to help you to manage this property. You can work smart. So buy direct with this kind of income property, single family home to 4 units, and you could easily have control, which is key to financial freedom. Now, of course, you learn, you get educated over time, right? I always keep learning, even though I've been doing this for decades and decades. And of course, you work with a team and with a network that can put all these things together for you. And finally, last but not least, some of you may not have heard of this individual, but most of you, if you in the investment game for over the years, you have heard Warren Buffett, right? Warren Buffett said, "Be fearful when others are greedy, and be greedy when others are fearful." So with that in mind, hope you got a lot of great information from this video, and I will do this every week on a weekly basis, which is great value add properties. I know, see, here's the thing, you buy boring investment, right? You don't need to buy in a trophy markets such as Austin, Texas, or Boise, Idaho, or Phoenix, Arizona, or Las Vegas, all this kind of trophy, pandemic boom markets, with up and down, a lot of volatility. So you get rich slowly over time. You stay the course, invest over 10 years or more, and let your team to help you scale your portfolio so you can work smart and not work hard. You can do this passively, you can do this remotely, and you don't, whether you buy 5 rental properties over time or 10 or 15 or 20, you can do this very successfully, very little time out of your hand to do this kind of things, because you have a team, you have a property management available to help you, have a turnkey provider who's been doing this for a long time. They will provide you with this great off-market properties. So great concept. A lot of people have not heard of this kind of concept, but by virtue of you attending this video, you're given this amazing opportunity. So if you receive a lot of value from this video, please click smash the like button, and also subscribe to my YouTube channel. And last but not least, put your email into our email newsletters on the website below this video, so you can become a member of a real estate community, so you can learn about real estate investment opportunity on a weekly basis, similar to what you're learning right now. All right, so thank you for attending. I will see you on the next video with new listings every week. So if you have the motivation, the commitment to become a long-term investor, which I know you can, regardless of physically where you live, this is the concept, this is the philosophy, this is the way to do it, in my opinion. Thank you so much. This is Steven Yi. I will see you on the next video. Have a nice day. Bye-bye.